FASB creates GAAP. And what is GAAP? Where does it come from? Well, FASB will create what are called as Statements of Financial Accounting Standards, or SFAS. But what is that, and how are they created? Well, from an accounting principles perspective, you first learn that GAAP is what guides all accounting decisions. Intermediate accounting takes that basic GAAP concept to the next level and actually explains more how they come about. How do they create the rules? GAAP principles are part of the much broader conceptual framework. So it's important to always take it back to the conceptual framework, where in principles we always said, remember your GAAP rules. Well, now we're going to say, remember the conceptual framework. How were those GAAP rules created? It's a framework that was created by FASB to provide guidance for the creation of hundreds of SFAS, or accounting standards. That's what documents the actual accounting rules accountants and businesses must follow. Following GAAP guidelines within the framework is really how SFAS are created. Because the underlying objective of the conceptual framework is to provide useful financial information. Now, there are three main categories. Now, this may vary some depending on the textbook you're using. There are qualitative characteristics, financial statement elements, and there are recognition and measurement concepts. So what does this really mean? Well, the conceptual framework was, we had a lot of rules out there. Some of them were conflicting. So years back, FASB came together and said, okay, let's make a framework, a foundation for making and revising all our accounting rules. That's what the framework is. So what are those qualitative characteristics? There are fundamental characteristics and enhancing characteristics. And again, depending on your textbook, this may be presented a little differently. Fundamental characteristics are relevance and predictive value, confirmatory value, and materiality. There's faithful representation. Is it complete? Is there neutrality? Is it free from error? Is it unbiased? The enhancing characteristics, comparability. This relates to consistency and verifiability, timeliness, understandability. The underlying constraint will be cost effectiveness, or the cost benefit principle. So now, what are the financial statement elements? What goes on there? You know most of this. In accounting principles, you learned the order to create the financial statements. You knew you had to do the income statement first, then the statement of owner's equity, later called shareholders' equity, and then the balance sheet. The elements are listed in the Statement of Financial Accounting Concepts number 6, or SFAC number 6. There are a total of 10 elements, and you're going to remember most of them. There's revenue, expenses, gains and losses. Comprehensive income is the 5th. So where do we go from here? These 5 elements: revenue, expenses, gains and losses, and comprehensive income. So the statement of owner's equity contains the next 2 elements: investments by owners, distributions to owners. That's 6 and 7 of the elements. Next statement, of course, would be the balance sheet. But first, remember that net income or loss is closed to owner's capital, but this is not element number 8. That would be double counting your elements, because 1 through 5 were in the income section. Element number 5, other comprehensive income, that is now also closed to owner's equity, but separately in a different new permanent account. Comprehensive income will be discussed in a later chapter. So then what comes next? So we're up through 7. We have 3 more to go. The balance sheet is going to have the last 3: assets, liabilities, and of course equity. Your textbooks may list the 10 elements in a little different order, but if you remember them in the order by creating the financial statements, it may be easier to remember what they all are, all 10 of them. So the summary: first 5 go on your income statements. Next 2 go on the equity statements, and the last 3 go on the balance sheet. If you order it this way, the order you create your financials, it's a little easier to remember. So conceptual framework review, there are qualitative characteristics, F and E, just a way to remember this. Financial statement elements, 5 plus 2 plus 3. If you go back and review the video, you'll see this is just a memory trick. And now the third area, the recognition and measurement concepts. What are we talking about here? Well, that's GAAP. The GAAP rules that you learned all through accounting principles. There are assumptions, economic entity, sometimes called the business entity, the going concern, periodicity, that was your time period assumption, monetary unit. And then there are principles, the realization principle or the revenue recognition principle, the matching principle, which is the expense recognition principle, mixed attribute measurements you may have, and we'll talk about this later, and then there's the full disclosure. So what is a mixed attribute? Well, you could be measuring something by its historic cost, by its net realizable value, that's how accounts receivable must be valued, by its current cost, we record inventory at its lower of cost or market, present value of future cash flows, time value of money, and then fair value adjustments. We will talk quite a bit in intermediate accounting about how to record fair value adjustments while still maintaining historic cost. So that's it. Those are the 3 areas of the conceptual framework, which are the basic building blocks in creating all the statements of financial accounting standards. Fundamental and enhancing, 5 plus 2 plus 3, those are your 10 elements. 5 are on the income statement, 2 on the equity statement, and 3 on the balance sheet. And then those GAAP measurement rules. That's where you need to focus. This is where we begin in intermediate accounting.